Welcome, everyone. Today, my guest is Managing Editor James Kleimann to talk about a security breach at the CFPB and a bill looking to ban the use of trigger leads for mortgage customers. First, here's a word from our sponsor. This is Sarah Wheeler, Editor-in-Chief at HW Media, talking with Matt Dowd, Vice President of Product Management at ICE Mortgage Technology, about mortgage automation. Matt, where is the company focusing investments to reduce the cost to originate?
Well, we look at the market holistically and really as an ecosystem, and therefore, we're investing accordingly. And what that means is we invest in everything from the point of sale, origination, underwriting, e-close, data, even into the secondary, and everything in between. So our focus is really to create automation and efficiencies every step of the journey.
I love that. So important right now. And listeners, you can find out more at icemortgagetechnology.com. James, welcome back to the podcast.
Hey, good to be back.
Great to be back. I love when I get to talk to you 2 times in a week because that means we have so much news to talk about. So the story I'd like to start on is the fact that the CFPB, the regulator of mortgage companies as well as other financial, institutions that serve consumers, itself had a breach of personal data. Can you tell us about that?
Yeah. So here's what happened. There's an employee who worked at the CFPB, and they made an unauthorized transfer of records containing personal information on approximately 256,000 customers at one financial institution, as well as other confidential supervisory information on 45 institutions. That said, there was no record that the evidence was shared beyond the former employee's personal email account. But certainly this is considered to be a major incident, and the Bureau had to report it to Congress. And it's really a lot of red meat for Republican Congress members who have been looking for any opportunity to take down the CFPB a peg or two.
It's a bad look. I mean, this is the agency that requires, financial institutions to jump through all sorts of hoops to keep things confidential and safe. And here they have their own employee doing it. The other thing that struck me, so the Wall Street Journal first reported this, we've got a story up as well, is that there was confidential supervisory information on 45 institutions. So almost like, what does that exactly mean? Is that what the Bureau was doing with all these institutions, what files they had on them, what actions they were going to take? What does that mean?
It's hard to know right now. The CFPB has released very little information. They have, however, downplayed the severity of this data breach. They said that it's essentially personal information largely limited to 2 spreadsheets with names and transaction-specific account numbers used internally by that financial institution. We also don't know the identity of that financial institution. However, the CFPB did say that that spreadsheet does not contain consumers' bank account numbers, and it can't be accessed to use someone's account either. But it's also a bad look because the employee, the former employee, I should say, they were terminated, of course, reportedly has not complied with a request by the agency to delete the emails, at least as of Wednesday, and we're reporting on this on Thursday. So it's a very, very bad look, and Republicans have jumped on this and they say, wait a second, why is the CFPB trusted to collect more data, burdening all of these financial institutions and limiting services for customers when they themselves have demonstrated that they aren't in every case, responsible in handling consumers' financial information. So it's yet another difficult incident that the CFPB will need to overcome.
I mean, it sort of defies imagination that a regulatory agency has not been able to get its former employee to even certify or provide attestation, I think is how they said it, that each email was deleted. And I'm sure that's because, maybe there's not a law around this or whatever, but wow, that just seems crazy.
No, there's definitely a law. There's no way that you are legally allowed to send confidential information from a regulator to your own personal Gmail or whatever it is. I mean, I would bet my entire net worth, which is say. Not all that much, but enough to make my life pretty difficult for a couple of years. That geez, sorry. I would be willing to bet my personal net worth that this is absolutely illegal, and there's probably going to be some legal action taken to force this employee to delete the emails or at least make sure that it can't be spread any further. And we also don't know why this employee forwarded the data in the first place. So there are a couple layers here, and Republican lawmakers, they want Rohit Chopra, the director of the agency, to release more details to explain, how bad is this? How many people are potentially compromised? Again, the CFPB says this is really limited information. It's just names and transaction specific account numbers. But again, until we have a little bit more detail, we just don't know. But it's not a good look by any stretch of the imagination. However, the Democrats who are on the Senate Banking Committee say that the Bureau followed protocols. They notified Congress, and that they don't want people to jump to conclusions so quickly. And so it's become political, as one might expect anything relating to the CFPB to be.
It is difficult for anything not to become political these days, so I get that. But if I am one of the institutions that it supervises, that the part that would jump out to me is the confidential supervisory information on 45 institutions. So even if it's a spreadsheet, if it's got some is that like a list of where they're? I mean, total conjecture, but that's what happens when you're not transparent about what that means. Is if I'm one of the institutions being supervised, and somebody has collected that confidential information, that's a problem.
Yeah, and so when the agency notified lawmakers last month, the CFPB said, look, we became aware of potentially inappropriate use of personal email account on February 14th, Valentine's Day, I believe. And then a subsequent review found 65 emails, some of which had attachments that contained confidential supervisory information. And of those 65 emails, according to the Wall Street Journal, 14 of those emails contained personally identifiable information about customers. What that kind of information might be, maybe it's, credit card information, maybe it's mortgage information, maybe it's related to, Social Security numbers, and we just don't have much clarity at this stage. But we do know that there have been other breaches at other agencies. This is the first I've heard of with the CFPB, but people may remember that records of more than 20 million people from the servers of the Office of Personnel Management were part of 2 cyber attacks about a decade ago, and government is certainly liable to. They're vulnerable to hacks and even whistleblowers or people who just decide that they want to share what they think is inappropriate. The issue in Massachusetts with the Massachusetts Air Guard, National Air Guardsman Jack Teixeira is one example, right? I mean, that this is it appears to be quite different, and we don't know the motives behind it, but yeah, it's a very, very poor look for the CFPB, and given that the Republicans do control a number of pretty important committees in Congress, I think we're going to hear a lot more about this in the coming weeks, whether they want to release it or not.
Yep. No, I mean, this is not something that people are just going to let go. And I mean, your average consumer isn't going to be calling their congressman, hey, do something about the CFPB. They have no idea what that even means. But like I said, if I'm one of the institutions being supervised by the CFPB, I absolutely would be all over this, and I'm sure they will be. So we will be keeping an eye on that as that unfolds, and following up on when the employee does go ahead and delete those emails and what they find out further. Geez. So, okay, well, let's switch to another DC oriented topic, and that is a bill that would ban the use of trigger leads. Tell us about that.
Yeah, this is a good one. This is real real good stuff if you're in the mortgage industry, and especially if you're an LO or a lender who's doing a lot of first lien originations, and you're frustrated at just one, the amount of spam. Like, I don't know how many people know this. When I applied for a mortgage, and I went with kind of a smaller, or more of like a mid-sized lender in the country, but as soon as I applied, I got so many just spam calls and emails and texts, and so one of the credit bureaus definitely sold my information, right, to data brokers, and some of them were competing mortgage companies, others were just like marketing firms that compile these so-called warm leads and then sell them to someone else who's looking for an origination commission. So it's definitely something that a lot of people feel very passionately about. And let me break it down. So Richie Torres, he is a congressman here in New York. He is looking to amend the Fair Credit Reporting Act by prohibiting the creation and the sale of trigger leads. And this is something that the National Association of Mortgage Brokers and there are some other trade groups involved have been pushing for since at least 2018. And they really want relief here because it's such a debilitating and not a good experience for the customer. You're applying for a mortgage with a company, and then suddenly you have 15 other companies that are trying to get your business. And there are people in the mortgage space who say a lot of these companies that are trying to kind of glom on don't do it ethically, and they confuse customers, and it's bad for everybody. And why on earth is a credit bureau allowed to sell this information in the first place? So it's typically these leads consist of names, contact information, other data, and a lot of significant personal information is on there. It contains financial information, and so the NAMB, the National Association of Mortgage Brokers, is really hopeful that this is going to go through committee, that this is going to get fully passed, and that effectively Experian, TransUnion, and Equifax are banned from selling these to other data brokers.
Which obviously not something welcomed by those credit bureaus. Of course, they can do this in a lot of other, they can sell this kind of thing in a lot of other industries, even if they just don't get to do it for mortgage, right? I mean, this is a pretty narrow reading or narrow defining of what they can do and what they can sell.
Yeah, and this is kind of the tip of the spear in terms of lead generation. The best kind of leads are always going to come from your primary sources, right? So if you're a mortgage loan officer, let's say you're a broker or you're working at a distributed retail model, you want to be as close to that lead as possible. And so in most cases, that's going to be the real estate agent, right? But in others, it might mean a financial advisor, or I know some LOs who do a lot of business with divorce attorneys, right? And so that's going to be a better lead. That's going to be a higher quality lead. That's going to be a lead that is much more likely to close than these trigger leads. But people wouldn't do this if there weren't money to be made, right? So we know that the credit reporting bureaus are making some money. They don't break out the profits related specifically to trigger leads, but it must make them money. And there are all kinds of, sort of like lead generation companies that are that are buying these leads from the Experians and TransUnions of the world and packaging them to a lot of consumer direct shops. And it's going to represent a major change in how warm leads are generated, and so this is really good for what I maybe inelegantly call like eat what you kill LOs, right? You have the contact with the primary source, or the borrower reached out directly to your company, right? And that got distributed to you or one of your colleagues, and that's a much better proposition than sort of this trigger lead call center model. And one of our reporters, Connie Kim, spoke to a couple loan officers. She looked across the internet, just trying to get a sense of, what is the consensus here? And one of the LOs, he's based out of South Carolina. He said, I can't begin to tell you the number of times a client in processing calls one of my LOs to question the bombardment of phone calls from internet call center sweatshops offering a much lower rate and faster closing, and within moments of their loan application. And another LO in California noted that clients get a lot more calls than before from competing lenders once they get one of those hard credit inquiries. And that just causes so much confusion. And sometimes the customers end up going with, who they believe is going to be offering a better rate. But then, once the cake starts to get baked, then there are more fees, and there are, sometimes bait and switch tactics that are used. So I think this is, if it goes through, and it's still very early yet, there's quite a process before any bill becomes a law. And, we don't know that this will pass, but I think it has pretty good prospects. That said, the three credit reporting bureaus are also very powerful entities, and they have their own lobbyists, and they have their own, expertise and their own incentives for trying to make money on, selling leads, whether they be trigger leads or other types. So it's a complex case. I think it's going to take probably a year or two to really fully, whether it goes through or not, but to see any major change.
Calling all mortgage, title, and insurance leaders. With interest rates shutting down your refinance business, your relationship with your real estate partners is more important than ever. HW Media wants to help you deepen relationships and find success in this competitive purchase market by inviting you to attend Gathering of Eagles. Real Trends Gathering of Eagles is the real estate industry's premier event, bringing together leaders from the most successful brokerages in the country. For the first time ever, this closed event is open to our full audience. Check out the show notes to find out more, or head over to realtrends.com to purchase your ticket today.
Our story quoted the Consumer Data Industry Association, which understandably has their own take on this, which I don't think they think this is a good thing. And they're like, at a time when interest rates and housing prices remain elevated, this is helping consumers maximize their choice. And so, their statement said lenders making timely credit offers can maximize consumers' choices when they need it most. When shopping for a mortgage, this can mean saving thousands of dollars. And of course, we have these two push-pull things within the industry. There have been quite a few things initiated so that consumers can shop easier for a mortgage lender. But I'm not sure that the way that this is executed, to me, it's the way it's executed that's the problem. If I got some sort of, if I'm looking for a lender and I got these other ways, but like you, when I did this, I was just bombarded. I couldn't answer the phone for 2 days because I was getting called all the way through work every 15 minutes. It was just like, wow. That was not a good experience for me. And then it was just overwhelming and confusing. And I know a lot about mortgage.
Right. And I do too. And
Right.
so I can't imagine what the everyday average consumer who is already probably a little frazzled or overwhelmed by the mortgage process and just all the paperwork. And when you buy a home, there's so much that goes into it. And then on top of it, to receive so many phone calls that you never consented to, right? It's not like Experian, TransUnion, or Equifax say, "Hey, James, congrats on applying for a mortgage. It sounds really exciting. You're going to get a house. We wanted to make sure you were aware that there are some other offers out there, and maybe the lender that you initially contacted doesn't offer the best product." And that would be different than just randomly getting 50 phone calls in a 24-hour period from lenders that I have never heard of, and I do this professionally. And so, yes, I think that there are cases in which someone does inquire with the lender that they initially went with, and then they do get a better rate. I think that's very possible. Again, these things wouldn't be happening if there wasn't a financial incentive. I think it's unlikely that there are a lot of people who are saving thousands of dollars from a trigger lead shop, but it is possible, I suppose.
I share your skepticism there. As you said, there are a lot of ways that you can think you're saving money, and then when you get into the weeds of it, you are not saving money over the original person that maybe you contacted and you knew about through more relationship means, or just that they have a big name in the space. Because like you, that most of the calls that I got were not from people who are recognizable to me.
Yep. Yeah. I heard from random, consumer direct companies that when I look now, did $230 million in business in a year. Like that's a very, very, very small shop. And it most of the companies, by the way, that contacted me no longer appear to be in business. So I don't know that that's really a benefit to consumers either.
Yeah, no, boy, that's a great point. Well, I know we have a lot of things going on in the newsroom and some things coming up. What are some of the features that we should be looking forward to?
So we are doing more reporting on the trigger lead question, where we are looking to speak to LOs who have potentially lost leads or who have had to work with clients who become confused after they receive, the 40, 50 phone calls, text, emails, et cetera, that sometimes come with trigger leads. So we're going to be working on that. We are looking to do a few follow-ups on what happened at HomePoint and the new company that is in a way spawning from HomePoint called the Loan Store. And we've got a couple more going on in terms of what's happening at Open Door. And so they're really looking to, instead of competing with agents and denying them a commission by buying the house outright, right? As an iBuyer, they're looking to integrate them further into their process and offering higher commission splits. And so we're going to be looking at that and really the broader iBuyer model right now and what the future holds. And personally, I don't think it has legs for the long term, but Open Door technically still standing. OfferPad, again, technically still on their feet. So it's early innings yet, and we're excited to dive in and share what our reporters are picking up every day.
I spent some time with some title folks this week at an event in Austin, and it was fascinating to kind of see what they're focused on. One of the things is that FedNow program, which is sort of like the federal government sponsoring. It's kind of like a Zelle or a Venmo or whatever.
Yeah, I've heard
And
of this.
you're going to be able to do, sort of instant payments through the federal government site, which sounds great. But if you're a title person, there's some complications there on using that to, pay off, doing what you would normally do through a wire transfer, and the potential impacts there for fraud and also losing some money if there are nefarious players in there. So it was really interesting there, and I know that we've got Brookley Hahn working on a follow for that. So I'll be really interested to see that. Right now, you can already do that, but it's going widespread this summer. And I haven't heard a lot about that. I mean, there's been some things about it, but it's like, oh, okay, a payments thing. But the federal government getting into the payments space is actually super interesting.
I hope that they do a better job of it than some of these private companies. So just to give you an example, my wife and I had a baby 16 months ago, and we have an excess amount of strollers. So we have 2 travel strollers. We have like this big like Humvee stroller that is an absolute beast. And we just don't need 2 travel strollers for one baby, right? So we're looking to sell one, and my wife puts pictures up on Facebook Marketplace and says, $100 for this stroller, barely used, honestly. And about half of the inquiries were Zelle phishing scams. And so someone will say, yeah, I'll pay it, no problem. And they'll pay you like almost immediately. And then you'll look at the email, and the email address that it comes through is like Zelle payments 2@gmail.com or something. And then of course nobody comes to pick it up because they never intended to and never intended to pay you. So I imagine that the government will be a little bit more discerning than some of these companies that really don't have the ability to do much once the instant payment goes through anyway, right? Anyone who is, erroneously Venmo'd someone they thought was a friend turned out to be a stranger and requested the money back is, probably going to be a little SOL there, right? So I imagine the government will do a bit better job there. That said, the government and technology, it usually pretty choppy when they try to get it off the ground. I try to pay my taxes in New York State, for example, and you have to set up your own username and you have to have all these documents. And then it just tells you, sorry, like your account can't be registered today because the system was overwhelmed and they couldn't process enough people setting up accounts that day on tax day. So it's just stuff like that, right? Like, I mean, if you remember the rollout to what we colloquially call Obamacare, just stuff like that is always going to be I think, a situation where there are some kinks to work out in the beginning, but hopefully it can be a groundbreaking program. And hopefully, the title insurance, which also is starting to invest pretty heavily in technologies and really making, I think, a lot of strides toward modernizing, will have to figure out how to integrate it, because they're just going to get left behind if they don't. And that's, I don't know if I mentioned this, but last time, I'm in contract to sell a house, and I've been very surprised at how slow and analog the title process has been, and how little recognition there is from other people in the real estate space as to doing things a little bit more digitally. So I thought, okay, look, I know that I'm going to have to get a notary if I don't want to attend the closing, which is scheduled for the 28th of April. So I talked to my real estate agent about it, and she says, oh, okay, well, if you don't want to do that, you're going to have to find a notary, and you and your wife are both going to be there at the same exact time. And then you're going to have to go to a separate store to get a slip to send it back. And, oh yeah, no, they don't accept emails for this sort of thing, but they do accept emails and only communicate via email for other parts of the process, like sending back your disclosures to the IRS and stuff. And you're like, what, why, what, how does this make sense to anybody? Right. And I do this for a living, and she does this for a living. Like, we're all in the real estate space. The buyer is actually a real estate agent. And so the whole thing to me is just so crazy that we're no joke, like a decade behind. It's still distressing when I think about it. So today I have to take a little bit of time off work after this podcast, Sarah, to find a notary.
That seems very old school. Yes. And,
Very.
both you and I believe this house is in a resort area, correct?
It has an HOA, yeah. So it's sort of like, it's in the Poconos. It's sort of a vacation-y destination. There's a lot of short-term rentals, which is not something we really want to deal with. And we didn't end up making it out there all that much because we have a baby, and it's just too much.
Well, I had the same exact situation when we sold in a resort area, and there were just limited options. And in general, this is not just the title company in the resort area. Everything about that resort area, it felt really like, sludging through mud instead of water. What should have been an easy process on all sorts of things, getting the permit, talking to, a lot of people. It wasn't just the title company, but it just shows, there's lots of things to do there. I do think the title industry is very much maybe not the people we've dealt with on certain things, but they're interested. But in this case, the Fed now, the problem is, while they welcome the idea of a safer way to send it, if somehow you have gotten if someone's fished somebody and gotten the wrong email in there or whatever, gotten the wrong information of where you're supposed to put it, there is no way to recall it under the current way that it's structured. Now, Alta and other people are in front of, the different powers that be in DC to say, hey, here's some alternative ways we could just tweak it a little bit so that, we don't all lose a bunch of money because somebody got in there, wired it to the right place right now. And a wire transfer, what they say is they can get back about 80% of something if it's within a certain amount of time. If you're alerted to it and they can jump on it, about 80% can be recovered. In this current thing, it will take like 3 to 6 seconds to get money out from the institution to maybe to where they thought it was supposed to go, but it's fraudulent, and there's no way to recall it. So that's a problem. That's kind of like that's a major problem. Why would someone want to use that? So you're going to have consumers wanting to use it because it's quick and they're familiar with it, like Zelle or whatever. But you're going to have title companies and lenders being like, yeah, this is a really bad situation. So
going to be a lot of happy princes in Nigeria, though.
Absolutely. So I'm looking forward to the feature that's coming on that, and just to learning more about that and all the things that your newsroom's working on. So James, thank you so much for being on. Really appreciate it. And good luck with your closing.
Oh, thanks. Yeah, I'll let everybody know next week how it goes.
Absolutely. Thanks.